Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is Not So NFP Live. Today, we were expecting the NFP numbers to drop from September, and we're not going to get them again today. The U.S. government is still shut down. We're going to go through all that here in just a second, but we're not going to get any jobs numbers today. However, we did have some big downward revisions earlier this year that we need to talk about that really show that maybe the U.S. labor market's in pretty bad shape. We've got a big-time event coming out. It's not necessarily a huge event, but a lot of people are going to be trading it. That's the Consumer Sentiment Index. That's coming up here in a few hours. I'm going to go ahead and preview that and get you ready to go there. And we've also got just a litany of markets to look at. U.S. oil is definitely one of them. Andrea was just asking about U.S. oil. I definitely want to dive in there and really show you what exactly is developing in the oil market because I think it's pretty important. Great Britain Pound USD, we've got a trade idea there. Kiwi Aussie, we've got a trade idea there that's coming into play. Gold had a beautiful pullback, and then we're seeing some big-time volatility right now in the gold market. We were just back above 4,000. Now we're coming off just a little bit down to 39.90-ish, but a lot of volatility right now in the gold market. And then the dollar yen, we had sort of a teachable moment on the 920 crossover on the 4-hour chart. I'm going to show you that and how you can use that 920 potentially to position trade and or swing trade your favorite Forex pairs. So definitely welcome to the room. Unfortunately, the lead story today is what? Well, we got no jobs numbers. Right here, U.S. Bureau of Labor Statistics, an official website of the United States government. Announcement, suspension of federal government services. Darn it. There it is, U.S. Bureau of Labor Statistics. This website is currently not being updated due to the suspension of federal government services. The last update to this site was on Wednesday, October 1st, 2025. Updates to the site will start again when the federal government resumes operations. We had a vote last night that came through, and once again, we saw the Republicans and Democrats fail to pass a funding measure for the United States government. So now what we're seeing is just politics, really at its, I don't know if it's at a high level, but we're just seeing negotiations right now. Certain people want certain things. Neither side's willing to cave, and your government shutdown is going to extend into next week. We've been going about, 10 days, 9 days on the shutdown, 10 days. You're going to start seeing some things happen from both sides now if, in fact, this thing isn't solved probably over the weekend. You're going to see layoffs out of the administration. They've already been threatening to lay off a ton of people. They're going to furlough a bunch of workers, which means they're not going to be paid. There's a pledge right here. Trump says the military will be paid. You still have to find the money to do all these things. And you're going to see some major political moves here. And I think that you're going to see a resolution here relatively soon. I don't believe that it goes all the way to a second week. I think this thing's solved and wrapped probably after the weekend negotiations. Now, one thing about Washington, D.C., I've never been there. I know that we have some traders that are in that region. The thing about politics in D.C. is business gets done on the weekends. So, they're going to, the senators and the Congress people, they're going to go out, they're going to socialize, they're going to hit the bars, they're going to go to the restaurants, they're going to be on the phone, and the whole thing's one giant negotiation. This news usually breaks over the weekend. I expect them to have a deal in place probably by Monday. I think that everybody's ready to give the other side at least a little bit of what they want, and I think you're going to be moving on down the road here relatively quickly. Now, a lot of people don't believe that. They believe that neither side's going to cave on this, and I don't believe that at all. I think that this is about negotiations. There's only like 6 or 8 votes in there that can sway this thing, get this stopgap measure passed, and I think that you're going to get that over the weekend. So probably going to be loaded up for NFP next week. And that's going to be sort of the key to what we do the rest of the month is taking a good look at the jobs numbers because they dictate everything right now. The Fed is watching employment closely. We know that there's been a major pullback in employment, from where we were potentially last year at this time. That's interesting. And then also inflation. Inflation's a big one. Now, remember, another key event that we're not going to get is CPI. We're not going to get those CPI figures either. And that's a big deal. So I believe the Fed has these numbers and knows them. It's not like they just quit counting or calculating them, but we're not going to get them to trade. So a lot going on right now, guys. I think that we've got some good markets that we're going to be working on. Wow, incredibly active live chat here. Great to see everybody back. Just a few of the folks. Julius, going to see a TJ Sens. All right, guys. Let's see, Joshua Chung. Always a pleasure, Josh. Bienvenido, Meta. Hi from Burkina Faso. Well, welcome. We got a global community here. We got everybody from Dillon, Montana, up here in the northwest United States to Burkina Faso to Asia. We've got them everywhere. Australia, New Zealand, you name it. Let's see. JD and Adventures, good to see him. Chan Mark, what time is the NFP? No NFP today, Chan. Sorry about that. Ahmed, good to see Ahmed. And I don't know how to read that. Buy or sell, 3. I guess it starts with a 3. 3, buy or sell. Buy or sell what? We got a lot of ideas to buy or sell. Good to see everybody. Andrea Gorwal, good to see you. Tuku, always a pleasure over in the How to Trade community. Steve Francis, hi Shane. Obviously not much news out of the U.S. today. No, there's going to be some action there on the University of Michigan Consumer Sentiment Index. I kind of think that you're going to have some trades hit the board on that just because it's the only thing out. And believe it or not, traders love to trade, and we're going to probably trade anything we can right now. All right, just enjoy it. All right, Leslie, good to see you, Leslie. Welcome. Nico, Chan. All right, Andy. Okay, guys, let's get it right out to price action here, break down a market for you. This was one that we're not going to spend any more time patting our backs. We had 62, 64 sells. This was a beautiful trade. The question was from Andrea earlier today. She said, Shane, what support level do you like? Do you like any support levels for WTI crude? Well, right now, the big thing to remember is this. You're in fall seasonality. Okay, you're in fall seasonality. That typically is going to lead to bearish price action for WTI crude oil pretty much every year. The other thing that's working against crude oil right now is the dollar. For some reason, the dollar index is right up around 100 again. So it's been a real nice week for the dollar. It should be no surprise that you're seeing that double heat on crude oil. So stronger dollar means lower crude oil prices, and then also fall seasonality means bearish price action in WTI. So those two things are really bringing crude oil down. Now, as far as support goes, I'm not really interested in buying it, but I will give you some levels that are probably worth watching to the downside. So what you have right here is you've got a double bottom that's set up back on the 2nd and the 3rd of October. I would be watching that relatively closely, and that's just our basic swing low. A lot of folks would, call that, the bottom of market structure, or maybe it's a liquidity sweep. I don't care what you call it. The bottom line is that's a swing low, and the low down there is right around 60.40. So in my view, is 60.40 really relevant? Well, we've got a low posted today of about 60.46, and we've bounced up. So the scalping's pretty good around that level to the top side. What I would be looking for, though, is more of just a broad look at a key level, and the key level is 60. To me, 60 is probably going to hold up a little while. And what I mean by a little while is you're going to see some short-term bidding probably right in front of 60. One could argue that we're seeing that right now. Could you really plan a break beneath 60? I want to be very careful with what we do here, because even though we're bearish, trade location sells from 60. They're not necessarily bad, because I do believe your downside target has to be right down in here, and that's what somebody would call a liquidity sweep, a bullish liquidity sweep, whatever you want to call it. Your low right there is 55.15, right around 55. So let's go ahead and just draw a broad picture of what we can expect here out of WTI crude oil. Now, this is very basic analysis. It's very basic. There's nothing really fancy about it. There's nothing elegant about, 60 and 55. No, really, there isn't. The big thing to remember, though, is that 55 level is your yearly lows. So if we do break beneath 60, I do believe we run at yearly lows, and now's the time to do it. As long as you have the U.S. dollar sort of hanging on to its value, and you have fall seasonality, you're probably going to have some big time action there. So we're going to try to get to the point where we can take another big short. But as far as buying, I don't like buying. If you want to play a scalp, 60.09s, stop yourself out at like 60.89s, somewhere in there. Pretty good. I think that's pretty good stuff right there. I think that's going to be a rock solid scalp, but don't marry it. Don't sit there and say, okay, we're going to go long from 60 and I'm going to do that no matter what. I think that you need to be very, very quick on the trigger with your stop loss there, because if this market does break out beneath 60 even, you need to run for the hills and regroup and wait, because you can see, we were talking Bollinger Bands yesterday. A lot of you joined me for the Bollinger Band strategy session. And you can see we had real tight daily Bollinger Bands here. They started to open up a little bit with this move, but they're still tight. This market is not volatile compared to where it was, say, back in June, right? Well, what does that mean? It means that the market really has loaded up for a long time. This swing high right here that developed back on the 26th of September, 66.42. We've traded between 66, roughly 65 and 60 for a long time. Going back to that bull run you had back in July, which is sort of the peak of crude oil season. What did you have since then? Really flat markets. That typically signals that you're loading up for a big break. In my view, it's going to be a bearish one. Let me see. Jatinder, I'm from India. Could you please speak more slowly? Yeah, I'll try. I usually move pretty fast. So if you hear something you don't understand, Jitender, I'm sorry, I don't know how to pronounce. I'm not very good at pronunciations either. I'll call you Jay. Jay, if you get behind on the stream or you don't understand what I'm saying, it's always available on these YouTube channels. Go back and watch them. Come on over to the How to Trade room, howtotrade.com. Log in, send me a private message. I will rectify anything that you really want to talk about. So I do talk fast and I get going because we do have a lot to cover. But I hear you. I'll do my best to slow down just a little bit. Holy Business from Togo, right on. Hi, Elias from Tanzania. Wow, welcome. Let me see, Bren98. If the U.S. government know the numbers but can't release them, then surely they've been leaked and that's already priced into the charts. I think that you're onto something, Bren. I think that that's you've been a trader in our How to Trade community for a long time. And that is an astute observation, and it's exactly what I think. I think there's no question those numbers are already out. They're already out. Now, do I know them? No, I don't know them. Do I know anybody that knows them? I know a few people in New York City I could probably call and see if they know, but my guess is they don't know, and even if they did know, they wouldn't tell me. So you're 100% right. They already know. The guys in Congress already know. Jay Powell, they already know these numbers. I don't care what they say. They probably mentioned them over dinner. I mean, Jay Powell is probably out with somebody from the Bureau and says, yeah, these next job numbers are going to be interesting. And Jay goes, really? How interesting are they going to be? And the guy's like, they're going to be pretty interesting. Reaches for his coffee and says, I like a weak cup of coffee. It's all signaling. You guys, I'm sorry. I believe in all that. There's no way that one person in the world saw that data set and it's a secret. I don't believe in secrets. I really don't. Conspiracies are very real, but a secret to be contained to one person, I don't believe that. Especially when you have staffs and reams and reams and reams of paper and research that go into these figures. There's no way. Everybody on the team sort of has an idea what it is, and I would be shocked if some of the people, the powers that be, don't already know. That's my opinion. That's sort of where I come out. If you guys want to trade any of this stuff, head on over to the Switch Markets community. We've got a reverse KYC program that can get you up and trading immediately. Some pairs are like a 0.01 spread, real tight spreads, zero commission accounts, trade thousands of markets. We had a bunch of trading tools that I might go over towards the end of the session that just got launched that can help you do anything from risk management to choosing a hot market to trade. So there's a lot there. And also our Switch Markets YouTube channel. Check that out. There's a lot of content that's going to be dropping there beginning next week. So definitely be tuned in there. You're going to want to see that. Let me see. D-Shane, what happened to the non-farm payroll today? Well, it got canceled. Got canceled because the U.S. government is closed. Let me see you. Okay, so Bryn, so when the numbers do end up coming out, will it affect anything that much? We know Pelosi already knows them. Yeah, Pelosi probably knows. I think that you're going to see a real crazy thing that happens when the NFP finally does come out. You're going to see a rush of volatility like usual. We're going to see a big-time market overreaction. This is my own personal speculation. This is speculation, in my opinion. I think you're going to see a tremendous overreaction to these numbers because the media is going to jam. They're going to get in there and cover the story 6 ways to Sunday. There's going to be a tremendous amount of talking points because we haven't seen them. But think about what's potentially going to happen here, Bren. You're going to have an NFP. Let's say it drops next Friday, okay, the 17th. Drops the 17th, and then what? 2 weeks later, you're going to have another NFP drop. Now, the question is, what about CPI? So we're going to go NFP, CPI, NFP, CPI, and it's all going to happen before the next Fed meeting. But here's the problem. All that data is going to be on a compressed time frame. I think we have an opportunity maybe to see a market washout and a big overreaction on something that may not be as big of a deal as we think, just because we got the data a little bit later and people are going to be acting with a little bit more urgency. Sort of a hypothesis I have there. That's what I think. We'll see how it plays out. But I see this as being an incredibly unique situation. And anytime there's something that's unique, you're definitely going to see some crazy stuff in the markets. That's just the way they work. It's the way it is. Uncertainty definitely spurns price action. Okay, so if you guys are interested in switch, head on over. We got a trade update here. This is a trade update that I put out on howtotrade.com. If you don't get these, head on over to How to Trade, log in, register, click on my picture. They'll be emailed out, blown right to your inbox. Is the U.S. NFP off for Friday? Yeah, it is. It doesn't matter. The Great Britain Pound USD is in place. So the idea here was very basic. We had a big-time retracement zone here in the Great Britain Pound USD, which is about right around 130, 142-ish. I love this level. I mean, I really do. 132.79. This is a monthly chart. I like those macro levels. They perform a lot better over the long run than your 5 or your 1 or your 2 minute charts. Believe me. But in any case, we've got a beautiful thing here. 13-period EMA. That's my soup du jour. That's what I go to every single day. 131.71 is our 13-month EMA. That's a big deal. That is a big level and a big deal. And then right there, you've got the convergence with 38%, right around 131.42. So that area between 131.75 and 131.50 is a big-time support zone. We have a trade idea out. It's a 131.55 bid. That's what I intend to do. I'm going to sort of bid right in here, right in this zone, right in here. That's the idea, and I think we got a pretty good chance to succeed. We just got to get a little bit more selling, and I do believe it's possible. We'll wait and see exactly how the government shutdown plays out. As of right now, it's helping the U.S. dollar, believe it or not. But something like this is a P formation. This is a capital P formation, and what that is basically is a bullish signal. Okay, so what do you got? You got a run and a rotate. It's like a capital P in the English language, and what you have is rotation. So you've almost got a range-bound market that's just setting up right up in this area. My Fibonacci's, I probably should lock them, but essentially that's where they were. Right here, though, this is pretty good stuff right here. This area right in here is sort of what I'm thinking we're going to trade for a while. So all we got to do really is just play the ranges. If we get the bottom side of this range down near August's low, somewhere right around 131.55, maybe even 131.60, I want to be aggressive down here. I don't want to wait. But this area right here probably going to be your monthly low. Now, anything can happen, guys. Anything can happen. That's a pretty darn good level, though, for the Great Britain Pound USD. I think we've got a chance there to win with a real swift bid. Let me see. Blue Mango, good to see you, Blue. Hearst says the NFP today. Nope, it's not today. It got canceled. The U.S. government is closed for business, so we're not going to get the NFP figures. Here's another trade idea that we have out that I'm sort of waiting on and sitting on. 2022's low in the Kiwi Aussie, 87 even. We've got sort of a monthly low right down in that area, 87.36. I'm looking at 87 and a quarters, 87.25s as being potential bids here. Watching that one closely. Typically, these markets do have memories. And when you see a situation where you got a big spike low like that 87 zone in this Kiwi Aussie, very, very big. And remember, if you guys have any questions at all, or if you have any markets that you'd like me to look at, I'm more than happy to do so. On a stream like this, that's really a great way for us to sort of address what's going to happen potentially later today or early next week. So if you have any markets you'd like me to look at, go ahead. Gold, it's not a party without gold. Everybody loves gold. Talked a lot about this 38% level right down to 39.68. This was a tricky trade. If you had staying power, you nailed it. If you didn't have any staying power and you got flushed out of the market, you and every other probably retail long. This type of candle right here, this daily candle, big negative day, right? Negative 1.59% in the midst of a really stiff bull market and a break above a key level. Is that unlikely? Not really. The way that markets move is very simple. They trend. And during these trends, they have areas where they wash out all the short-term traders, all the retail traders that don't have deep pockets. They can't go long and just stay the course no matter what. Long's the right answer. It really is. Now, if you caught the top of this and let's say you stepped up and sold 4,050s, then you did very well, and my hat's off to you. You're smarter than I am. I didn't want any part of any shorts up there. Just not interested. Now, this sell-off right here, we had some pretty good scalping. Initially, a couple dollar real tight scalps, but if you took a position from this 38% retracement level, right around 39.68. We talked about yesterday, I said the probability of this trading 4,000 again is very real. It more than likely is going to happen, and it did. So this bounced right back up to 4,000 if you bought 39.68s, and you could take the heat, and it went right down to 39.44s and then bounced up in your favor about $40. That's a hell of a trade. It really is. The problem is do you have the money to make that trade? Not many retail traders do, unless you have your leverage dialed way down. Then you have a chance. But something like this, great trade. So what are we looking at now for gold? For me, I'm looking at it with sort of, I'm a bit skeptical to the top side. Clearly, the sellers have dug in at 4,000. They really have, because you saw the big sell-off there, and there's a retracement right up to 4,006, and then we came right back down. Let's go down to a short time frame and sort of take a look at what's happened in the near term, or I guess in the intraday trade. There was your big sell-off that was sort of a quagmire. We got messed up right in here. Still, though, if you had the staying power, you did very well with this trade. You had an opportunity maybe to take a secondary or third trade off of our support zone there. All that's very difficult, but what I'm saying is this. You really topped out. Nice big rally during the U.S. overnight right up there to 4,006. And now we've sort of put a lid on this thing at 4,000. So, are we selling 4,000s or buying 4,000s? More than likely, we're going to trade back up above 4,000, probably trend higher. But the way that markets work and the way that they function is we don't know when it's going to happen, and we don't know how far down or how big of a pullback we're going to have. Remember, the market's out to get as many people as it possibly can. And I don't say that to be negative. I don't misunderstand me. I'm not a negative person. I'm really not. The market is not against you. Nobody cares if you win a lot of money or you lose a lot of money. I want you to make a lot of money. I don't want you to lose, because I've been on the losing end of it. I know what it's like. I did it in the real estate market in 2008, and it is a living hell when you're losing. I don't want you guys to lose. I really don't. I want you to make money and win. Okay, that being said, the market, by its nature, is out to get as many people as it can. It wants to take your money from you. Now, that doesn't mean that it's against you. But if you put yourself in a vulnerable position at the wrong time, it will take every penny you have and then some. It's just that big. Okay, so what do we do? What are you talking about, Shane? I'm talking about traps. I'm talking about getting trapped into trades where you don't really have a good stop out point, and you don't have an opportunity to manage your risk. And this is a great example of this, and we talked about this on our break above 4,000 here in gold. There was a lot of folks. I actually placed a 5-minute trade on the live stream that I told you guys wasn't a very good trade. It ended up winning, making some decent money. But there was a lot of folks that were bidders up above 4,000, and I myself said, hey, listen, 4,000, you probably need to look at that as a bid. And it was some great short-term scalping. But taking a position from there and thinking that, okay, I'm going to buy 4,000 and cash out at 5,000, I love your ambition. It just typically doesn't work that way, meaning there's always going to be some sellers. There's always profit taking here. What happened? We had the big washout. We washed all the shorts that had their back against 4,000 out. There was your big rally. Then what happened? Then we had some profit taking, but we also had some algos that piled in on top of the selling. The profit taking, those were net sellers. Net sellers, selling begets selling. What happens? The momentum starts to come bearish. The algos pile in. A lot of the scalpers, the folks using dark pools and all sorts of different tricks, they start piling in and making their money to the short because they have a different strategy than, say, a retail trader that can read a trend and then wants to get long. That's okay. If you're ready for that, you understand the washout's coming, and it doesn't take much from you. It takes only what you want to risk. That's why I'm saying be careful with your risk. There's no reason to dig in and dig your grave on 4,000 and say, I'm buying right here and I'm betting the ranch and we're going to 5,000, because you probably are right. You probably are correct. The problem with your trade, especially in these leveraged commodities, is that when this thing pulls off down to about 39.39, that hurts. That hurts bad, especially if you bought 4,000 with any sort of leverage or size. Now, what happened? More than likely, if you were a retail trader, an intraday trader, you got stopped out somewhere down in here. And now the market's bounced right back in your favor. I've been there. I've done it. I've probably done that 100 times. And a lot of that comes from not designing your trades good enough or putting too big a size on it. So you got to understand how to manage your trades and your risk. This right here was really beautiful. It was a beautiful bounce. You didn't even have to buy the bottom. You could have bought this and grabbed a $30 bounce this morning. That's fantastic. 62% though. Is that a better entry to the long? Absolutely. Absolutely. This bid down here, somewhere right around maybe 39.20, 39 and a quarter. Very good. 39.17. You could bid anywhere really in this golden zone and feel pretty good about it. Do I think that's going to happen? Potentially it could. We could see a washout all the way down here to 38 and then continue back up to 5,000. Is it probable? No, not really. Not when the market's this bullish. Is it possible? Absolutely. Absolutely. So I'm watching this closely, guys. This looks to me like, according to Hoyle, textbook compression around 4,000. Typically, you see this type of thing before you make the next leg up. We're going to be watching this one closely. Okay, let's see. We got, let me see, Nico. Shane, I've got a question. You understand and read institutional order flow very well. How does one attain this kind of skill besides experience? Let me see, Alpha. Good live. Thanks, Alpha. Good to see you. Gut. Nobody wants to say it in this industry. None of the YouTubers that you see out there that are in the private jets and everything, they want to show you a strategy, follow the strategy, and you're going to make $1 million. That's what they want to tell you. I will say that there's a lot of gut feel involved in trading. There really is. I mean, you can be a mechanical trader with EAs, and all that's great. You run the most elegant system, the best intricate, in-depth analytics, beautiful risk management. You're dialed in. There will still come a time when you're running your system where you have to ask yourself, is this working? Do I have to change it? And that's going to come down to really your experience level and your gut. Now, you said aside from experience, I call a gut feeling really experience. There's people out there that just guess great, and they're just incredible at guessing. I'm not one of them. Typically, I have to have a good feeling and some reasons to make a trade or not. So what I would say to you, Nico, is how do you guess institutional participation? The number one thing that you probably have to look at is volume. When the traded volumes get really huge, all right, at least initially, like let's say you had a big volume day on gold futures. Go down and break that day into your, go to a 5-minute chart and start looking at if there was big block orders hitting the market, meaning let's say you're going along and you had, 150,000 contracts that changed hands on gold futures, and you go down to maybe at 3 or 4 5-minute bars where you saw, okay, that 5 minutes was like 10 or 12,000. Huge amounts of volumes in very short periods of time. That does signal institutional participation. That means either somebody is hitting the market with block orders, meaning they're launching these large orders to either open a new position or they're unwinding a huge position. The block orders are a big tell. Now, unfortunately, let's say we're trading gold spot. You don't have volume data you can depend on. As far as your Forex, your OTC markets, you can look at the volume data there and just try to think of it in terms of relative. How big is the volume this minute compared to the last minute? Things like that. And when you see really huge outliers, then you can start to say, okay, maybe that's a block order. If you're trading exchange-based futures, then you know exactly how many contracts are being traded, and it's much easier to see those block orders. That's the second thing. So first thing's experience and gut. Okay, let's throw that out. The second thing's block orders. Big orders that hit the market fast, that's institutions. There's nobody out there like me and you that are sending 500 contracts to the WTI crude market. That takes a tremendous amount of margin money. It takes a tremendous amount of staying power. Now, I'm sure they're out there. But typically you start seeing, somebody drops 2,000 contracts on the market. That's either an institution or part of an institutional game plan. Now, from my experience, and we're going back to experience, you see those orders hit the market around key numbers. 4,000, they were all over that. There was absolutely tons of institutions participating at $4,000 gold. A lot of it was profit taking. All right, a lot of it was trying to take short positions. We saw that too, and they worked. You can't say that going short from 4,000, and just letting it bleed against you up to 44,060 and then getting the big retracement. You can't say that didn't function well. You had to have a ton of money to make that trade. But to me, the numbers are a big tell. So I'm looking at key numbers and block orders around those key numbers, volumes, traded volumes around those numbers. That's going to give you a pretty good idea what's going on. Now, as far as, do you know anybody on the inside? I wish I did. Yes, sir. No NFP. So that would be my answer to you, Nico. It would be a function of your key levels, your big important levels, and then also those block orders. And if you want to spot block orders, you could take take a look at your intraday time frames, and you could go down to like a 30-minute or a 5-minute. You could go to a 1 minute if you wanted. Let's see if we can find a block order real quick. Let's look at gold futures. Let's see if anybody hit gold futures today. All right, so if we've got a daily chart out there, we know 4,000's been big, but the futures market's a little bit different. We're not going to focus as much on 4,000 because it already went. It already went several days, really ahead of the spot. In any case, right there's your break. Are there any block orders in play today? Let's go ahead and look. Let's take this down to, say, a 5-minute chart. Okay, that right there has my attention. How many volume? Okay, that's a volume of 25,000 in 5 minutes. Let's take it down to a 1-minute chart. Okay, 1,200 contracts in a minute. There's somebody involved there. What did they do, though? Okay, you got a negative candle. You came down and you tested our 4,000 level. Did they bid it? It's a negative candle, but where did that volume come in? Was there a little bit of a void here? And you saw the sellers wipe it, and then all the volume came into the bottom on the bid? Potentially. So I would say that somebody got involved there to protect it. They've been protecting it all day. Right in here, here's a couple of other, decent volumes, but that's not nearly high enough to say play institutions. It's just 1 minute chart. Let's see, what's the big, okay, what's this right here? Back on the 9th of October, 1,200. Okay, that's heavy volume for a 1 minute chart. Stuff like this, you see these volumes, 1,700, 2,000. Those are significant. What was happening at that point? Market was sort of topping out up here, wasn't it? Net sellers, maybe. Maybe the institutions are keeping a lid on this thing. That's how I would start to discern exactly where the action is. These big block orders that hit, on like a 1 minute. And you can take it down to a 30-second if you want. You can get as granular as you'd like. I mean, theoretically, you go down to a 1 or a 2 second or a 3 second chart and see exactly when those orders hit the market. You just got to be ready for anything. And remember, those block orders, I'm relatively confident that was a block order right there. So let's say we wanted to break this down, and I haven't done any work or made any videos on this stuff because it's hard. I mean, I just pretty much lost everybody that's watching this live stream. But, I mean, you asked, so let's go ahead and see if we can do it. So let's get rid of all this stuff, get rid of all our drawings, and see if we can isolate exactly when this block order came across the market. Now, it was back, let's see, 5:46 a.m. my time, so 7:46 Eastern. Let's go down to, say, a 1 second chart. See if we can find it. You bet your tail that's a block order. Gentlemen, that's a block order. 497, a volume of 497 on the 1 second. For 5 minutes, let me see, it came at 5:46.44. That's a block order. Is that a sell or a buy? Negative candle. Sell's probably one. But once that order hit the market, that was the end of the show. Look at what happens to volume after that. Drops down to nothing. What do you think happens to price after that? Creeps. Why? Because that was the net seller. That was the seller. What happened? Went down to 4,000. What do you think was behind that block order? Profit taking or new shorts? Tough to say. I don't know. I can't say. But I can tell you this. 497 contracts hit that second. That's a block order. Something to think about there, though, if you're interested in institutional participation. And these are concepts that I haven't really talked about because they're difficult. That's hard. Nobody really wants to do that kind of detective work to figure out what's going on. So let's say right there that you got somebody that's in there protecting 4,000, which is what it boils down to. What do we do now? Do we want to buy it? Do we want to be a net bidder potentially at 4,000? Here's your 30-minute chart. So there's your low. What's your low? 39.95. I mean, that would be the line in the sand for me. If we wanted to scalp the gold market today, this low on this is 30. Let's see. This 30-minute is 39.995. So do you want to buy 4,000s or sell them? You probably want to buy them. That's what I would say. Let me see a journey. What time is NFP? No NFP today. Just let's recap real question. Suspension of federal government stuff. Right there. Suspension of federal government services. U.S. Bureau of Labor Statistics. It is off. NFP is off. We got one other fundamental that we're going to cover, though, and I'm going to sort of get into that right now. Let me see. Bryn, yeah, that's super interesting. Thanks, Shane. Good to know how to use volume. Yeah, always be watching volumes, but it's hard in the Forex. It's really hard in the Forex because it's an OTC market and you don't necessarily get accurate volume data all the time. Okay, this is an interesting trade, though. I did want to point this one out, and then we'll go over our fundamentals and any other markets you'd like to look at. As far as what we have right here going, we've got a situation where this is the Great Britain pound or Euro Great Britain pound. We've got a daily trend line that's set up. This is a top side trend line, and we're testing it right now. Now, a lot of folks are going to say, Shane, that's not a trend line. I go, yeah, it is. Take a look at what you've got here. Trend lines are never going to be perfect. We've tested the waters above this trend line several times, but we can't get a bullish close above it. So what do you have right there? You got sort of some tails right there. The sellers are really protecting that downside, that 45-degree angle down right here in the Great Britain pound euro. Fascinating stuff. Maybe if you get a bullish close, If you get a bullish close above this trend line, that's going to be a signal for a lot of traders that are going to want to go long there. Now, our key level in that case is going to be, 87.10, so right around 87. So the question for the euro pound players today is going to be, okay, on the market closure, are we going to bid sort of that 87 range and play this thing to rally, or are we going to bet that we come back down beneath our trend line? I think this is a fascinating trend line, even though it's not perfect. Look at how many times it's been tested. I always say the third time is the biggest one. Well, take a look at how many times that thing has been viable topside resistance. You sort of have to go with it until it bucks. So if you get like a bearish close beneath the trend line, you're probably going to be selling. If you get a bullish close above the trend line, then you probably play a reversal here, a bullish reversal, and look towards the top side, maybe like 87.50, something up in there. I thought that was worth looking at that trend line there, and that's over on your Switch Markets and MT5 platform. Definitely think about that market too. Maybe not for a trade today, but maybe for Monday, that might be a pretty good one on a reversal. And potentially you could either play that as a resistance level if you get a bearish close and then take the sell, or if you get a bullish close, maybe take the buy. But it feels to me like this Euro Great Britain pound feels like that trend line is going to be a mover and a shaker here. Should be an interesting type of a dynamic as we roll into Monday's session. Okay, this was the week. Today we didn't have non-farm payrolls, but what's coming out here in a couple of hours, I think about another hour. Let's see, we got about 30 minutes until the U.S. Open. So you're looking at getting into a news event that typically isn't as big as it once was. Now, Michigan Consumer Sentiment Index at one time was a big deal. They would sell this consumer sentiment data to institutional traders. We've been talking institutions a lot today. They would sell it to them so they would get the data about a minute before everybody else. Now, I don't know how that's fair, but the University of Michigan, this basically is a telephone, I believe it's a telephone survey where they call up consumers and they ask them a couple of questions and they get there, and then they decimalize the answers into just a quantifiable number there. 54.1, 55.1. We're expecting sentiment to fade just a little bit. So if it does fade a little bit, are we going to get any action off of this? Don't be surprised if you're going to see some headlines because there's nothing else to write about today. And unfortunately, headlines typically drive market action. So we could see some action off of this Michigan Consumer Sentiment Index. Just don't get too carried away with it. You don't need to bet the ranch on this, but be ready for some short-term volatility. I believe this one drops in about an hour. I believe it comes out about 30 minutes after the U.S. Open, and that's by design. It's designed to build volatility. These are preliminary statistics, which means they're the first release, and you're probably going to see some volatility based on these numbers. Be careful if you're trading, especially if you're scalping. This one could definitely shake you up a little bit. Now, the University of Michigan Consumer Sentiment was revised lower, so we're seeing fading sentiment, and that's really my point here. This is a 10-year chart. Goes back to the first Trump administration, 2016 through 2020. Sentiment was very high. Life was good, and then COVID happened. And an interesting thing that's happened since COVID, even though we had some, I don't know if it was euphoria that the world was reopening and everybody was happy and sentiment was better, you haven't seen sentiment recover to pre-COVID levels. So, there's books written and there's so much research that's come out on what exactly happened with the COVID shutdown. I have my own opinions. You have your own opinions. I can tell you for a fact that when you look at a 10-year chart of consumer sentiment on something like the University of Michigan survey, the world changed. The financial world changed. People's psychology changed. You'd never seen the world shut down before, and it was shut down. The psychology of your consumer, the psychology of people has never recovered. It's never recovered. You can look at these numbers and say, wow, those are really high. The market wasn't really, when you look at stocks are a lot higher now than they were. What happened? The world changed, and it hasn't gone back to normal. I hate the term new norm. I hate it. I don't hate really anything. I hate the idea of the new norm. This is the new norm. Your sentiment's very low, and there's a lot of reasons for that. Inflation's the big one. Take a look at what happened. COVID shut down, boom. It shook everybody's foundations and what they knew of the market and what they knew of the financial world and just the world in general. It changed everything. And now you've got a consumer that's fighting with really a negative psychology. The fact that we haven't gone into a deep recession is amazing. It's absolutely amazing. It starts to make you really wonder about the gains in the stock market and asset pricing right now. Is it all a fugazi? Is it all fake? I don't know, but this chart right here, I pulled this earlier today with, about 4:45 a.m. my time, and I was looking at this and I went, wow. until you step back from the 10,000-foot view and take a look at where sentiment was and where it is now. I mean, really, this is intuitive. Think about this. Sentiment was pretty good. You saw the first real sustained market rally since before 2008, and that started to develop in 2015. We started to see some growth, and then you saw it explode under Trump in his first administration, and then you saw 2020 crashed, right? So you got the 2020 crash when we shut it down for COVID, and then look how fast the sentiment came back. You know, right when the world started to reopen, early 2021, everybody said, okay, back to normal. Things are going to be fine. We're going back up here. We're going to do some business, but it didn't work that way. Why? Inflation, and really the economic impact of what happened when you shut the world down is still evident. This is trending down. Consumer sentiment's trending down. You're at 55. That's dreadful. I mean, your all-time lows were right down here. Why do you think they were so low in 2022, middle of 2022? Inflation. At one point, year-over-year inflation was 9%. That's why right there. Came back a little bit. We saw some interesting things right here in 2024, and then we just started trending back down. That's a fascinating chart, and it's one to watch. It's one that economists are going to watch. It won't really help you with your trading. It helps me sort of develop an idea of what's happening from a broader perspective in the markets, but it's fascinating stuff. Let me see. Andy, WTI is breaking beneath 60. Interesting. Yeah, so we have U.S. oil CFD right at 60.12. Let's get back out to price action here. Let's go to the futures contract. 60.12. Yeah, we're going to come off here. You know, if we were going to trade this, what's the low right now? What's the daily low? The low right here is 60.02. So going back to Andrea's question, I mean, that right there would have been your scalp is just buying 60s. What was the low right there? Low right there. Let's see. Let's go down to a 1-minute chart and see exactly what's happened. This is a futures contract, November futures. That right there is your low. Your low is 60.02, immediate bounce right up to 60.16. That's beautiful. That's how you intraday scalp off of key levels. And now we're coming back down. You don't want to be caught holding the bag long when this thing breaks 60, and it looks like it's going to break 60 right now. 60.02, 60.02, print. Let's take this down to, say, I don't know, a 10-second chart. I want to see exactly what happens down here. Okay, 60, 60.02. Our volume, notice our volumes. We've been talking a lot about that today. That's pretty heavy volume for 10 seconds. 173 right there. That was sort of your sell-off. This area right here, we had some bidders step in, 122 in 10 seconds. Okay, there's your washout. It looks like it's coming. Okay, right there. There's your volume kicking back in. So essentially they protected 60, 59.96. You got that immediate bounce right up, back up above 60. So right there, 401, a volume of 401 came in right beneath 60. The bidders were there. Now, what do we have happening here? What happens when those bidders are gone? Now, notice our volumes are dropping off. We've got a big bearish day developing in WTI crude. You're off about 2.5%. What happens now? As soon as those bidders are gone, this thing blows up to the south. The question is, do the bidders win from 60? They're digging in. Are there enough bidders to protect 60? Getting a bit of a rally, 60.08, 60.07. Do we think the bottom's in for the day? I don't. No way. As soon as these bidders are done protecting 60, look out below. Look out below. This range could really extend. And then on the other hand, there's a lot of folks right now that are long that said, okay, I'm putting my back against that swing low, and we're going to play this thing maybe up to 60.35 or something like that. We'll see what happens there. That's for sure. All right, one last chart we want to look at. U.S. dollar, Japanese yen. One last thing to look at, too, before I get off of crude oil. Right now, about the last 7 minutes, we've seen the open of the traditional NYMEX pit session. What that means is it means that a lot of volume enters the market every single day at 9 a.m. Eastern. Every day, that's typically when crude oil futures kick off for real. Overnight trade's great, and you get moves and all that jazz, but the volume is much, much lower. And right now is a very, very hot time for WTI, and we're trying to decide if that test beneath 60 is going to be today's low. There's a lot of intraday traders that are betting that, hey, we spin higher from here, and maybe we do. But I'll tell you what, that's what we call an A-period low right now. If that stands up for the next 23 minutes, all eyes will be on that low, and when it gets washed out, you'll be looking at a big-time trend day down. A lot working for the bearish side of this market. Do you want to go short right now? Not necessarily. They're still protecting 60s. You got to be very careful right now. You're looking for a definitive break beneath 60 and then sell retracements. That should be the ticket probably the rest of the day. Or if you want to try to pick an intraday bottom, I don't have a problem with that at all. Just be sure you watch your risk. Stop yourself out. All right, U.S. dollar, Japanese yen. This is the last chart we're going to look at. This is a 4-hour chart. And really the story Monday, everybody wanted to talk yen because we really closed a lot higher. And what we have right there was what? Our 920 EMA crossover. Those of you that are familiar with this, and I know this is in hindsight, but it's an interesting development here. When the 9 crosses over the 20, you're looking to buy. You're looking to buy this market, and that's sort of our code. We've got this coded into Pine Script. If you're interested, reach out to me over at How to Trade, and I'll send you the code, or I'll point you in the right direction. But this yellow, this gold bar right here, that's your buy. So your buy right there gave you a position trade for the entire week. That's fascinating stuff. So what had to happen for you here? You got the open, and then you waited 4 hours for that close, and then the bid was there, and the bid was from 149.67, and then you're up there at the top of 153. That was a hot trade. It doesn't get much better than that for a position trade over a given trading week. That was interesting. I really like that trade. Pretty good stuff. All right, guys, I've droned on long enough, about an hour already. I know most of you that tuned in for NFP have probably long since gone, but that's okay. We covered a lot today. We talked a little bit of volume. I got a lot of, I like time price offering charts and market profile and volume analysis is something that is very much a part of my trading. I sort of avoid those topics on these streams because they can be very difficult, and there's a lot of nuance there. I can't really tell you exactly how to read volume perfectly. There really aren't many rules with it other than watch rising volumes. That typically means you're going to get a directional move. And then lesser volumes after a directional move typically means you could see a reversal, especially on short time frames. But a lot of times you'll see real heavy volumes and nothing will happen. Price will just go sideways. So then you're looking at potentially a breakout when the volume drops. It can be very, very complex. Anybody that gives you 100% reads on volumes, I would love to hear it, but I don't believe it, because volume is one of those things that is sort of a bear trap. It can be manipulated in a lot of different ways. Iceberg orders, there's so many different kinds of orders where they can almost spoof the market. It's supposed to be illegal, but they'll put big orders down and then pull them back, and then they'll hit you with 500 contracts here and then come back over the top when the move and buy back 1,500 contracts. There's so many games that are played in the futures markets, especially, that to sit here and tell you about volume is really difficult. But after a while, you start to see patterns in volumes, and you see where the volume clusters, and typically that's around your key levels. And when that's the case, then you got something. So right now I'm watching WTI crude oil, and this has been a marathon stream, guys, but take a look at this. We talked a lot about this just a second ago. What happened? The bidders stepped up en masse, hammered 60. They waited for the washout underneath 60, and they bought it. That's a beautiful scalp, buying 59.95s and getting a run up there to 60.12. That's fantastic. That's 17 cents and $10 a cent, whatever. Let's say you have 5 or 6 contracts. That's your day's work. You're done. This right here, compression, and then what happens to our volumes? They start piling into the market a little bit to the short, right? And then it dies, then it picks up again, and then you get a big bid right there, and then you come in again, and it sells. They're persistent. Back up to 60. Is 60 going to be the top for the U.S. session? The sellers are there. You see what's developing. The sellers are there. Interesting stuff. Okay, guys, I'm going to go ahead and sign off here for the weekend. I'll have the new live stream schedule up in the How to Trade trading room here momentarily. I've got a few things. We may be changing the time next week. I may be going earlier to sort of facilitate some other projects that are going on, but we may get that done. As far as what to expect next week, government shutdown is going to be leading the way. We don't have much in the way of economic data, so we're going to be looking at a lot of technical trades. I think it could be pretty good. And then also our news cycle. We're looking at, over the weekend, the big thing is the Israel-Hamas peace deal, supposedly. Return of hostages. We're also watching the U.S.-Venezuela. We were expecting sort of military attacks on Venezuela. That could definitely happen. Those are sort of the keys. And then also your government shutdown. Remember, the government does business on when? The weekends. They do business when the market's closed. So don't be surprised if some of the Senate leadership get together and they're having drinks and they cut a deal this weekend. Don't be surprised. All right, everybody. I'm going to go ahead and let me see. You will take morning sessions. I'm thinking about it, Nico. I need to probably look at my work schedule and what exactly I'm looking to do trading-wise next week. But we may be able to stream, probably not this early. This is pretty early for me, but maybe like an hour, maybe U.S. Opens or something. We'll see. We'll see exactly what to do there. All right, guys. I'm going to go ahead and sign off for a while. You guys have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.